Hello and welcome to the Oanda Market Pulse Market Snapshot. My name's Craig Erlam, Senior Market Analyst at Oanda. Now, as you can see, there's been a few notable economic events today. The first one overnight, the Bank of Japan decision. Now, they kept interest rates and asset purchases on hold. They did maybe offer a bit slightly more dovish stance than the markets had expected. Now, we've seen that Japan has fallen into recession in the previous quarter. We know inflation has been lower, so this has led to increased expectations that we may see additional bond purchases or additional asset purchases announced from the Bank of Japan, but that didn't come at the meeting, and moreover they suggested at least that we are not going to see any further stimulus in the medium term, because they do expect things like business investment to pick up, which should hopefully lead to these higher inflation readings down the road. They do focus a lot more on the inflation outlook rather than putting too much emphasis on current inflation. So slightly more dovish stance than we were, a slightly more hawkish stance, obviously, than we were expecting from the Bank of Japan, and that has led to some yen strength today. We've had some retail sales data from the UK, slightly softer than expected, but again, we shouldn't be too surprised by that. We had an unusually strong September, largely driven by one-off factors, things like the Rugby World Cup, the extra bank holiday. So we really expected to see a slight pull off there, slightly higher than expected pullback here, but consumer spending remains strong in the UK, a big consumer-driven economy, and with wage growth continuing to pick up throughout the year, lower energy prices, we do expect to see consumer spending to remain at these higher levels and therefore to continue to support the recovery. We had the meeting accounts from the ECB monetary policy meeting last month, and these were broadly in line with what Mario Draghi said during the press conference, still expecting to see further stimulus from the ECB, probably an interest rate cut alongside some additional bond purchase potentially come the December meeting, so no real surprises here. And we've also had some data from the US as well. 271,000 jobless claims for this week, in line with expectations. The Philly Fed Manufacturing Index slightly better than expected at 1.9, ending 2 months of contraction. But really, this sector is likely to continue to suffer as a result of the stronger dollar. Again, the dollar's got even stronger over the last month or two and could continue to strengthen if we do see an interest rate hike from the Fed. So the manufacturing sector is likely to continue to struggle. So we can't really take too much positivity from this 1.9 reading. The chances are we are going to see the sector continue to struggle into next year. Now let's take a look at some charts here, and really we're seeing a lot of really stability in the charts. We see that the gold has remained stable around these 1070 levels. Potentially we're seeing a bit of the dollar weakness as we approach the US session, or as we head into the US session. We are seeing a little bit more dollar weakness today. I think the fact that the dollar's rallied so much on speculation at the Fed is going to raise interest rates. Maybe we are starting to see some form of correction here, because you can see the same in the euro dollar as well, around these 106 lows, which has been a good support level for the pair. Now we're starting to see a bit of a correction. I think 108.30 you can see here could be a key level for euro. Whether this is going to be a broader correction or just a small minor retracement. Now, I've highlighted this before, this divergence, slowing momentum, despite the fact that we're seeing these lower lows being made, and we saw this completed again, lower momentum. So this may actually be that larger retracement this bullish divergence is suggesting we were going to see. We are actually seeing a similar divergence on gold, which would support potentially a move back towards these 1100 levels, which is going to be a key area of resistance because of these previous highs and these previous lows. We've also got this prior descending trend line as well, potentially intersecting at that 1100 level. The other one I really wanted to highlight here is dollar yen, because we are seeing a pullback in this pair finally. This is looking like a very bearish setup, and this relates back to the Bank of Japan meeting decision and minutes that I highlighted a second ago. The fact that it was a bit more hawkish is a bit more bullish for the Japanese yen, so dollar yen pair suffering a bit. We are trading at these very high levels, around this 123 level, this inside trend line providing some resistance along the way, and it seems that these 123.50 to 124 is proving to be a pretty key resistance level. If we can see this trend line broken, which I'll highlight a bit more clearly on the 4-hour chart, if we can see this trend line broken as part of this yen rally, that would suggest that we are going to see a more significant correction, which would bring 121.50 to 122 into play really here. Of course, these previous lows would also be important around 122.20. We're still seeing consolidation in WTI, a lot of pressure remaining on this $40 level. Again, if we see this broken, then we could see a move back towards these lows that were hit earlier this year. So you're looking at around 37.25 if we do see $40 a barrel broken. But yeah, as I say, up until the start of the US session, we were seeing a lot of consolidation, and now we seem to be entering into a brief period, at the very least, of some dollar weakness. For more in-depth news and analysis, check out Oanda Market Pulse at marketpulse.com. You can also find out more about Oanda and sign up for a free demo account at oanda.com. Here you'll also get access to Oanda Forex Labs, which has a lot of great tools aimed at helping you in your trading.